Welcome, it's denome. It has been about 3-4 months since I made a video last time, and I decided it's time to finally make a video again. So this video will actually be in 3 parts. One part will be me breaking down the Bitcoin price in the long term and where we are headed, just looking at the chart. And we're going to take a look at the on-chain analytics for Bitcoin and all the basically fundamental stuff for Bitcoin if the price is still supported to going upwards here. And the second part will be me talking about the inflation in the Europe and in the USA, because that's one of the reasons why Bitcoin is performing so well, because investors are afraid of inflation. So we'll be talking about that through these different news and some statistics on inflation as well. And the final part will be basically me talking about my personal life, because it has been a long time since I made a video. So I just want to briefly talk about that as well and the future of this channel going forward. So let's actually start with that. And if you're not interested in that, you just want the meat of this video, then there will be a timestamp somewhere in the description or in the comments. So take a look at that one and click away here. But anyway, just a quick update what I've been doing. I was able to basically get out of the crypto markets, and I made a video about that. I exited with about 40% of my portfolio into stablecoins before the crash happened, and that was pretty awesome. And I haven't really made videos after that. So what's been going on? I've actually been making updates here on the Telegram, and this is free to join. There's a link somewhere in the description as well. You can join here, and I have been making regular updates here anyway. So for example, this update here on 8th of July, I did say that I think now is a good time to start entering the altcoin market, because the crash had already basically happened here. And this was an excellent entry point, because Trust Swap after this went to $1.8. And I made a follow-up message after that as well, that I started exiting Trust Swap at $1.3 and also at $1.8. So I have been active here, but I just haven't been making videos. So what I have been doing is basically just playing World of Warcraft and just basically taking time away from the crypto markets, because I did feel quite burnt down from the whole Dogecoin mania, NFT mania, all these weird things that I just did not understand what the hell was going on. So all that burned me down, as well as I saw a lot of YouTubers now being like these gurus on YouTube saying like this coin is the next 100x coin, this coin is the next 100x coin, and just the whole thing basically burned me down. And my own portfolio is now doing pretty well, and I'm just much more conservative with how I invest going forward, because I no longer basically need to chase those 10x or 100x yields anymore. So just want my basic income coming from basically the stablecoin yields that I've made videos in the past, mostly using auto farm to generate yield on the stablecoins. At the moment, I made a video about that somewhere. You may want to take a look at it. But anyway, that's basically how I want my basic income to come from, is from stablecoin yield. And then my investment portfolio, which is going to be like the remaining 50% of my portfolio, is going to be investing long-term investments. So if I can get a 2x return on those, or 3x or 5x return on my on the investment side of my portfolio, that will be great. So I'm not going to take as much risk as before, as well as I'm not that interested into looking at every single coin, whatever can be the next hot 100x coin. So if you're looking for that kind of content, I don't think I will be posting those videos anymore, just because I don't have to anymore, and just want to take it a little bit slower as well on the crypto side. But I'm still very much interested in the macroeconomics and where the world is headed. So that's basically the videos that I will be making in the future as well, at least. But I don't know if I will be making weekly videos or not. I maybe want to ask you guys, what do you guys think? What kind of content would you like to see? I know some people would like to see me talk about more of the how to move away from your country and legally not have to pay taxes anymore and so forth. But I don't think I want to make videos about that because I'm not an expert in that. I don't know the jurisdictions in every single country, as well as the country you are from may actually cause some issues, or another country may be beneficial. Maybe you are married or maybe you are single. That makes a difference. So I don't want to talk about that. I just want to be talking about the macro stuff at the moment. So that's basically the content that I will be putting out. But if you have some ideas for content, I'm of course open to listen to you guys and what you guys want to see as well, because you guys may actually have some good ideas as well. But anyway, all that out of the way, I can say I'm somewhat back. I don't promise to make weekly videos or even regular videos, but I will be making videos when I see changes in the market, or when I feel like, okay, I think it's time to actually update what's going on because these and these things have happened. But anyway, let's get to the next phase of this, or next part of this video, which is actually talking about the inflation, and then we will take a look at the Bitcoin on-chain analytics and the price. ECB, this article just came out because ECB had a meeting, and this article came out today basically. So here they are saying that the ECB is not worried about inflation rate being too low, but they think that in the medium term, the inflation rate. Sorry. Yeah, I had to read that a few times. Anyway, they're actually worried that the inflation rate is too low rather than too high. So the ECB wants to pump the inflation rate higher, it looks like. And observers have said about the meeting that they do not expect ECB to touch the low interest rates at this moment, or announce any significant change to their colossal bond purchasing program. And what is the colossal bond purchasing program? It's basically asset purchases every single month until March 2022. So this means we still have basically a year of regulated, consistent money printing from Europe. So this is still going on. And if anything, it looks like they might actually be pumping even more money printing on based on what we are seeing here now, and what they are currently basically indicating here, that they are worried that the inflation rate is too low, not too high. So that's pretty interesting here. So that's Europe. And in United States, markets seem to be missing the risks on US inflation. This is the Financial Times, and again, this actually came out today as well. So what they are currently saying is that there might be another $2 to $3 trillion spending passed before year end. So 2022, it looks like from macro perspective that the money printing is going on, and if the markets start to show some weakness, then the Fed and the ECB are gonna basically just come in again and inject more money into the system. So that's what it looks like, and this is pretty interesting. From this article, from the person who wrote this, said that the Fed's deliberations point toward slower tightening. So maybe not tightening at all, and very easy money policy, which means that money printing will continue. So there will be a very real need for investors to protect their portfolios against higher, more sustained inflation. So this is going to be the story for until 2021 from macro perspective. Now you can argue if Bitcoin and crypto are actually hedges against inflation or not, but a lot of people who invest into Bitcoin actually do that as an hedge against inflation. And just looking at the actual inflation rates, US inflation rate at the end of July is about 5.37%. So if we take a look at the US inflation rates here on the chart, this is usinflationcalculator.com. It said here that 2021 is actually 5.4% inflation rate. So why this is important, I just want to draw it out so you can actually understand what's going on. So if you are an investor here, and this is basically 0%, the interest on your capital. So if you can get a loan with 0% interest, the inflation rate is about 5%. So you have to be making at least 5%. Let's call this the 5% line here. So if you are an investor and you want to hedge against inflation, you have to be making more money than 5.4% annually to beat inflation. So that's a lot of money that you have to be making, because previously, if you can make 5% annual yield, you are a king. But now, if you don't make 5% annual yield on your capital, you are losing money from inflation. And this is official inflation, which usually means that they have adjusted it a little bit to not actually show real numbers. So all in all, investors want to get at least a minimum of 5% gain on their capital with the 0% interest rates. So now the scary part is that if the interest rates actually start going up, that's basically when the party ends. So we have to keep an eye out on the interest rates, because so many companies, so many institutions are over leveraged. So once the interest rates start to go up, I would expect the market to actually crash quite a bit. So that's the key metric in the macro perspective, is looking at the interest rates. But the inflation, if you want to get 5% annual yield on your capital, what are your realistic investment choices? Gold hasn't performed 5% per year. So that's like, if you have been investing into gold and your idea has been that this is a hedge against inflation, it's not actually competing with this. So that's one of the reasons why investors are looking to invest somewhere else than gold, because gold just haven't kept up with that speed. So Bitcoin is one choice that they are doing, but 5% annual yield is a hard deal to get. And you can currently get that with stablecoins, stablecoin yields. If you just lend out US dollars in stablecoins, you can get about 8% or 12%, depending on the place, even 20% somewhere, but you have to take a little bit risk on the DeFi scene. So that's one of the reasons why stablecoins have been going up, as well as why Bitcoin and Ethereum and the crypto assets have gone up. But if you include all the speculation that is in the crypto markets and so forth, that's one of the reasons why crypto is doing so well. So now we have talked about the inflation at least until the end of 2021. And this, like, if the inflation rate went from 2% to now 5%, what is that a percentage increase? 150% increase in inflation. So that's just massive jump. So that's one of the reasons why I think Bitcoin will be performing much better than just the inflation until the end of the year, because this inflation number is so ridiculous, and the asset managers are asked to deliver insane returns for their investors. So they have to basically go towards Bitcoin, at least from what I understand. I could be wrong here, but I think it makes a lot of sense. Now let's talk about the Bitcoin. Actually, let's talk about the Bitcoin fundamentals, because they are much more interesting in my opinion. So I've been using CryptoQuant for a while. You probably know this already. It's a paid service, but I have the system here, and I have my favorite charts. So I will talk about these and show the numbers here, which I think are pretty bullish. So one of the numbers that we always look in this channel is the Bitcoin on exchange reserve balances. So this is how much Bitcoin is deposited currently on exchange accounts. So currently it's about 2.43 million Bitcoin is on exchanges, and the remaining Bitcoin is on private wallets. So whenever this number is going up, it usually means that people want to trade their Bitcoin. When it's going down, it means that people want to hold their Bitcoin for a for longer periods of time. So when this is trending down, it looks good, but as we can see here, the trend may change at any given moment. So this is not really a realistic indicator to predict the future, but you can see the trend where it's currently headed. And currently is headed down, so that's at least decent. This is the Bitcoin exchange net flow, which is shows the difference between the well, we don't need to talk about this, basically the same thing as here, just shown in a different way. All right, I lost my internet connection there, so let's just continue. Okay, so the next key thing is funding rates, and these are pretty interesting because these are showing the basically the derivative exchange funding rates for Bitcoin. So whenever these are high, it means that people are basically too bullish on Bitcoin, which means that the funding, they have to pay money every single hour or every 8 hours just to hold that long position. So if you want to make a 2x or 5x leverage move on Bitcoin, you have to pay to keep that position open. But when it's zero, you don't have to pay anything. And when it's actually negative, then you get money every single hour or every 8 hours just by longing Bitcoin with leverage. So this is close to zero, which is just showing that too many people are overly bullish on Bitcoin, at least on the leverage side. So I think this is very healthy for Bitcoin price increase. When it starts to go parabolic like this, it means that people are a little bit overly bullish and they have to actually start closing down their long positions so that they stop losing money from the funding that they have to pay every hour or every 8 hours. So this is looking good for the long-term continuation for Bitcoin, in my opinion. Another metric that I'm currently looking at is ETH 2.0 staking rate. So currently 6.3% of the Ethereum supply is actually staked on Ethereum 2.0, which is again good for the long-term price increase for Ethereum. And I want to take a look at Ethereum as well because it's one of the market leaders, and sometimes Ethereum actually moves before Bitcoin in some cases. So I want to take a look at that one as well. And next, and this is a metric that I started looking at recently, which is all stablecoin values. So this is the exchange reserves for stablecoins. So people want to trade more now with stablecoins than before because stablecoins have been deposited into exchange accounts, and this is pretty good again for the price increase. So the fundamentals for the price increase are much higher now than they were here when they had only $8 billion worth of capital in exchange reserves. Now they have $20 billion, so it's more than 10x what it was here in February, in the start of this year. So this is pretty good in my opinion for the long-term price increase as well. Next, we can skip that one. Estimated leverage ratio. So this shows how many people are actually leveraged on the crypto markets or Bitcoin. So I don't want to talk about this one, but it doesn't really give a signal from my opinion, but it just shows how much leverage is currently in the system basically. And a lot of people have leverage, but it's not skewed towards bullishness, which is basically why the funding rate is so low. Bitcoin active addresses, again, not really giving me a signal. Some people call this a good indicator, but I don't want to talk about that one. It's just something that I look at. Spot exchanges, net flow, derivative exchange, net flow. These are not the ones that I want to talk about, but miner position index, this is what I want to talk about. So this is what miners are doing. Whenever this number is up, it means that miners are selling their Bitcoin. And they were selling their Bitcoin all the way until about $50,000 Bitcoin price. And then miners just completely stopped selling their Bitcoin. And the miner position index is actually negative, which means that more miners are mining Bitcoin as well as they are buying Bitcoin right now. So all this time here, miners have been just hoarding every single Bitcoin that they can get their hands on. So this is one of those very bullish signals for Bitcoin price continuation. I don't know if this is actually still working as intended, because this just looks like this metric basically broke down, because the whole behavior for this has completely changed. So I don't know how valuable this information actually is or how accurate. But if this is true, then it's very bullish in my opinion. Next, let's take a look at here. All exchanges, stablecoins, I don't want to talk about that. I don't want to talk about USDT circulating supply or DAI or TUSD. Well, one thing I can say is a lot of people are calling USDT a scam, right? But if we take a look at the stablecoin ratios or the supply for USDT, you can see it's basically parabolic here. So a lot of USDT has been printed here, but the same chart is true for every other stablecoin as well. So if you take a look at TUSD, it's parabolic here. If you take a look at DAI, it's parabolic, and even USDC is basically parabolic here. So I would not say that USDT is printing money out of nothing. It just looks like, looking at these charts, that every stablecoin is in high demand right now. So one of the reasons why I want to talk about stablecoins is that stablecoins determine how much purchasing power is on the blockchain. So if you have a lot of stablecoins, it means that people can trade it and they can use it to buy something, or they can generate yield on the blockchain. And if you take a look at the redeem event counts, you can see that a lot less people want to actually redeem their stablecoins back into fiat. So this trend is clearly to the downside here. So once people get their fiat currencies on the blockchain, they want to keep it there as well. So for the long-term price continuation, I really like this kind of development here. So this is looking good. And for me, at least, why I think people want to keep it here is that stablecoins are super neat. You can transfer them over distances. You don't have to worry about how much you transfer if you use a banking system. If you transfer more than $10,000, then you might get into trouble, or there might be a probe against you. But with stablecoins, you can transfer any amount of money and no questions are really asked. And another good thing is with stablecoins is that you can currently get about 8%, 10%, 12% yield on your stablecoins just by basically loaning them out for institutions or traders who want to leverage on the leverage exchanges as well. You can use Celsius network for that. I've made videos about those, or crypto.com or some other service to generate the yield, or you can even use DeFi platforms to generate a little bit higher yield, but then the risks are a little bit higher as well. But those are basically the two reasons why I think stablecoins are in so high demand right now. And again, all these stablecoins run on these different blockchains like Ethereum, which has gone up in price a lot recently. So the more stablecoins we have on the blockchain, that basically also makes the whole Ethereum and other blockchains that run these stablecoins also more valuable, because they secure more funds than before. So that's basically what I wanted to show here. But if we take a look at the all stablecoin circulating supply here, it is saying here that the whole supply is actually 67 billion, which is not actually true. Because if we go to CoinMarketCap, you can see that the Tether supply is already 67 billion. So they only count, I don't know why, but on the CryptoQuant, they are basically missing half of the total market cap for stablecoins. I don't know why that is, but current market cap for all stablecoins across the market is $120 billion, and it's just continually growing. The market cap is continually growing. How much people want to have stablecoins on the blockchain. So that's a really good metric, in my opinion, to predict where we are going. I think there was one more thing that I wanted to talk about, the fundamentals here. Or was there actually? This was an interesting metric that I saw, and I went like, this is actually pretty interesting. So all stablecoins minted supply. So these spikes tell me when a lot of stablecoins are being minted. So in the future, I might actually want to take a look at this chart here, because as you can see, there was, how much was this? 2 billion stablecoins were minted here on this day, and it's basically this spike here. So when I see something like this, it actually would have confirmed this next move for Bitcoin and altcoins as well that happened this week here. So this was a reliable signal for this. But here, as you can see, it would not have worked at all, basically. So I think we have to be a little bit careful to not blindly trust this. But I think it was a really interesting thing to note. As well as I think it's quite interesting, when the price went down a lot, still a lot of stablecoins were minted, but not really redeemed. As you can see, the stablecoins have just been continuing to increase even during this basically bear market that we had here. So all in all, it's important to take a look at stablecoins, how much there are available, as well as these minting situations. So I think I will be keeping a closer eye on this at least. So now let's actually talk about the chart here. And I don't really want to talk about too much about this, but we just broke through this previous high here on the short term, as well as if we go to the 4-hour chart here, you can see that we had this how do I say, bearish divergence on the RSI, that the RSI was going down while the price was going up. So we call it a divergence. So that actually just pushed through that resistance line here, which is basically confirming that the momentum is going to go upwards. It always doesn't mean that the price goes upwards as well, but looking at all these developments that are going on in the market, I think that the continuation is the only logical way to go. But of course, price isn't always logical, so you have to keep that in mind. But in my opinion, it looks like the long-term, at least until the end of the year, move is pointing towards the upside, in my opinion. And if we take a look at the weekly chart, this is one of the charts that I like to look at because it shows us the history of Bitcoin all the way to basically 2012. And you can draw these different lines here. I have drawn these, how many are they? 5 lines here to basically show different trend lines for Bitcoin. And one of the things that was, I think, like weird, fascinating, and also highly cool was that this long-term trend line here that actually started all the way from 2013 was the resistance line for 2016, then started to actually flip towards support here, but then just well, not really support, it just blew through it here, but then it got resisted here, and then once it broke through here, that's when we had this big move here to the upside, and now we just touched it a little bit, and then we had this insane bounce back. So I think this trend line here might actually have some value to it, maybe not, I don't know, but I think it was fascinating that it just jumped exactly from this point here and not some other point in like, just, I think that was fascinating to me. Anyway, just wanted to show you that it bounced there. And if we just take a look at I'll talk about what it actually means, is that we had this confirmation of the upside move here. Then we had some resistance here. Unfortunately, my lines just don't align with this price top here. I think maybe I should change some lines here, but I don't know. Anyway, we went back, then we retouched it just as to confirm that the price will continue to go up. So maybe it has some value. Hopefully it will not be like what happened here, that we went to this trend line and then we failed to go upwards and then just basically dived down. So I hope it will not work like that this time, but to me, just all the signals are pointing to the upside at this moment. But again, of course, this is a highly politicized investment vehicle, so there's a lot of political risk. And what they are saying now in the ECB or in the United States might actually not be what they're actually doing. So you have to take that into account as well. But all in all, it looks to me that the whole market is going to go up. I don't know which coins are going to go up and which are going to go not as much up as some other ones. So do some, or I would do some, choose a few coins that have basically different risk profiles. What I like to invest in are coins that are undervalued, that haven't pumped for a long time, that have good fundamentals. The team is actually pushing developments, but no one else is talking about it. So currently I'm not investing in Solana. I'm currently not invested in Luna, even though they have performed really well. And I know a lot of people made money and a lot of people told me about this, but I did not invest in those. But right now they just have moved already so much that I don't want to be part of that. I want to be part of the coins that haven't pumped too hard yet. So unfortunately, I wasn't invested in any of these coins that were here. I had some other coins like CRO here, which I think will still do good, might not. But CRO hasn't done anything at all. It's one of those coins that just likes to hang out. Even through this whole bear market, it was like at the lowest it was 5.5. So it's just been consolidating all this time. So I've been investing more into sell. Maybe I'm wrong. Maybe I'm right. I don't know. Maybe, I don't know. if I can get 2x or 3x or 4x return this year, that's plenty good for me either way. I'm still invested in Band Protocol. It's one of those coins that I think are undervalued, as well as I've been investing into the Auto Farm token, the same coins that I've been always talking about. So I don't know, going forward, would you like me to cover some new coins, look into some new coins? Personally, I'm not that interested right now to look at new coins. Just wanted to keep an eye out where the markets are headed and try to capture a little bit of the value that is being made in this market, in the crypto space. Anyway, that's basically my update for this time period. I don't know when the next video will be. Leave your comments down below. I will try to answer at least most people here within the next week or so. So if you want to say something to me, I will be properly looking at your comment there. Anyway, thanks for watching, and I will see you maybe in the next video. Cheers.